And what kind of feedback a lot of these money managers are getting from some of their clients. To understand that and what's the outlook for the markets, we have Ajay Bodke of Prabhudas Lilladher, who joins us to discuss all those fundamentals. Hi Ajay, thanks so much for joining in. Well, you would have spoken to some of your clients as well. What is the mood like? Is there panic? Are they willing to hold in there, or are they asking for redemptions?
Good morning, Nigel. Thanks for having me on the show. In fact, I have been constantly in touch with many of our distributors and clients. In fact, just before I came on the show, in the morning, I spoke a few panic-stricken investors from America. And it is in these times, when there's a collective frenzy, an extreme fear psychosis across the markets, that you need to dispassionately explain to the investors that economic downturns have happened in the past. And as long as you are in those franchises which have emerged stronger due to sustainable competitive advantages, I think these are transient in nature. And let's not attribute a permanence, insofar as the shaving off of the earnings in many of these companies are concerned. And so once you reach out to them, and as also explained to them that the macros are extremely benign from Indian perspective, the fact that global food prices will continue to remain, I think, in their 30s or 40s for some time to come, and also the accommodative monetary policy and the stimulus that's coming globally, I think both in monetary and fiscal stimulus that's coming. I think once the panic subsides, I think these are the kind of valuations that if you take a 3-year perspective will be a very good entry points. For instance, if you look at the EPS number for the current financial year, we are looking at 515 rupees of EPS for Nifty, and we are trading at just 15.9 times at 8,200 levels. So even if I assume in the worst case scenario a very anemic 5% growth in earnings for Nifty for next year, we are looking at a 540 rupees of Nifty earnings for FY21, and we are trading at 15 times. So, and we are expecting this to last, this current pandemic-related panic to last, as per the US authorities. A worst-case scenario is a 3-month period, and the most optimistic scenario is a 1-month period. So I think there is this fear psychosis and collective frenzy, which we need to look beyond that and look at some of the market leaders. This is not the time to be adventurous, but there is no need to be adventurous. When you have some of the market leaders being available at 6, 8, 10, 12, 16-year lows, I think, and companies holding out hope of high teens kind of earnings growth over the next 2 to 3 years, I think I do not even look out for an adventurous ride.
Okay, Ajay, I just want to come in here. This is Sonia. So, you said that this is a good time to be looking into market leaders. There are so many stocks available at cheap valuation, relatively cheaper valuations now, whether it's HDFC Bank, whether it's an Asian Paints, the Bajaj Twins, Titan, and these are all market leaders in their respective segments. What are you looking to buy now, if at all?
Yeah, so, I have essentially looked at 4 or 5 sectors and some of the leaders out there, and I'm advocating investors to start nibbling in. So if you have 100 rupees to invest, I think the current levels certainly warrant at least 25 to 30% of the allocations to go. That's what I've been advocating with them. And if you look at sectors like, say, FMCG, you have companies, the food companies like Britannia, or personal products and conglomerate Hindustan Unilever. Utilities, I think, all of us know that the franchise that IGL has built in the NCR region, I think, is extremely strong, and the stock has come down from 540 levels. It is hurtled down quite massively from those levels. In banking, I'm advocating retail-focused banks like Kotak Bank and HDFC Bank, as well as corporate-focused banks like ICICI Bank. In case of insurance, I think all of us know how low insurance penetration is, and the marquee names like HDFC Life, a high of 640, I think currently available, at a very attractive valuation, with the business model being extremely robust. All the risks have been mitigated in terms of the product offerings, in terms of sourcing of business. So with a 3-year perspective, I think these are the kind of stocks like HDFC Life or SBI Life I'm advocating. In case of IT, I think even if discretionary IT spend might come to a halt, what about running the operations of the large multinational corporations? So Infosys and TCS I'm advocating. And in autos, I think I'm advocating Maruti and Bajaj Auto as the holdings.
Okay, all right, Ajay. Thanks so much for stopping by and giving us the entire list of stocks that you feel is pretty good. And on the point of the Nifty as well, being relatively attractive at around 15 times. Only problem is, will we have any EPS growth whatsoever in the coming fiscal? Well, only time will tell.